FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it is March 5th, 2020. You're going to be hearing this March 6th, 2020. It'll be released at 8 a.m. in the morning. That's when my effort is to release all of our shows then, doing my best to stay consistent because that's what it's all about. Anyways, well, I'm looking at the gold chart. Just was talking to Craig Hemke, Turd Ferguson, and it was up about $16 the ounce on gold. Now it's up $30.90 to $16.67. When you look at the 30-day performance, $114.40 the ounce, up 7.37%. And for 1 year, it's up $380 or 30%. And let's see what John Rubino has to say about that. First, as always, please write us, send us an email. What your thoughts are. Where do you think gold is heading? What is the ultimate number? 5,000, 10,000, 2,500? Just send us an email, kl@kerrylutz.com. So, John, hey, hope you're feeling well. And, wow, what can you say about these markets and helicopter money in Hong Kong?
Hey, Kerry. Well, what's it been for us? Like 3 weeks since we talked?
Yeah.
And that was the most eventful 3 weeks in financial history, probably. I mean,
you picked a fine time.
I don't know where to begin here. Yeah.
Well, let's just start with the imploding. Well, it all goes back, the catalyst, to the coronavirus. That's what set it off. But that is not the cause of it. And anyone who thinks it's the cause needs to go back and listen to the last 6,000 episodes of Financial Survival Network if you have a lifetime to do that, because it's just the catalyst, right?
Yeah. Okay. The basic story is that we've created the conditions for some kind of gigantic financial crisis / monetary reset out there. And then something just has to happen. In other words, a pin has to come along to pop the bubble. And it does seem to look like the coronavirus is a pretty good candidate now, because it has totally freaked out the global economy and the financial markets. You know, you've got supply chains shutting down right and left out there. For instance, India just announced that they're a big pharmaceutical producer.
Huge. And
they've decided to ban the export of a lot of important pharmaceuticals because they want to keep them at home now in case they need them. And so what do you do if you're a big American or European drug company and the source of your raw materials and a lot of the components for the pharmaceuticals you mix up disappear? You basically have to shut down big pieces of your product lines. And Apple, the maker of iPhones now, doesn't have the components to allow it to keep making iPhones, apparently. Their factories are just either shut down or some critical component is unavailable or whatever. And so they're stuck. And it just goes on and on out there. This whole just-in-time inventory management, free trade, long multinational supply chain world that we had built up, along with fractional reserve banking and fiat currencies, turned out to be unmanageable given the way we're abusing antibiotics and the fact that we're building gigantic cities of 25 million people where everybody's breathing the same air. A pandemic is kind of guaranteed in those circumstances. And we've set up a global trade system that is guaranteed to be disrupted by the next pandemic that comes along. So here we are. We're finding out that a lot of the systems that we thought would take care of us and allow us to continue to grow are actually so flawed and so fragile that they break very easily. And we're looking at the possibility of a serious breakage here, where the global trading system just doesn't work anymore. And again, like we talked about before we went live, you don't know how this virus is going to progress. Maybe in the spring, it just kind of goes away because frequently that happens with outbreaks. Or maybe it spreads and becomes uncontrollable. And that's kind of where we are now, where countries think they have it under control, and then it turns out that there's such a long incubation period and a long period in which carriers of the virus are contagious, that all of a sudden, the thing just explodes on you when you think you had it under control. South Korea just went from being unaffected to being debilitated by this in the space of a couple of weeks. And I'm near Seattle right now, where most of the U.S. deaths have taken place
10 have taken
in that
place.
area.
Yeah.
Yeah. And Seattle is really grappling with this, because what do you do? I had a doctor's appointment yesterday there, and they've got hand sanitizer in every entrance to every room. They don't shake your hand when you go in. They sterilize their pens. They've got a cup of good sterilized pens that you can use, and once you use it, they put it over in the to be sterilized bin. And that's just the beginning. Let some of the practitioners start getting sick in hospitals in the U.S., and then who knows what happens. We just don't know how this is going to play out, because it's brand new, and we've never had to test our defenses against something like this, or test our resiliency. We just don't know how we'll handle it. So very scary. But so the financial markets are reacting kind of like we always expected them to react to the catalyst. When the catalyst came along at long last to pop the bubble, we expected interest rates to go down, right? That was one of the big things, where we were going to head to negative interest rates like the rest of the world. Well, the 30-year Treasury yield now has a one handle.
Yeah.
In other words, it's below 2%. And the 10-year Treasury yield has a zero handle. It's in the, what is it now, 70.7% or something like that, some crazy low number that
insane.
We've never seen before. Mortgage rates are at an all-time low. And, the Fed did an emergency rate cut. They knocked 50 basis points off the Fed funds rate. And the stock market went down by 1,000 points that day. The market was completely unimpressed, because they looked at it and thought, wow, is that all you got? That's all you can do to save us? That's not good enough. And it just goes on and on. The stock market now, if stocks move less than 1,000 points on the Dow in a given day, that's considered a boring day now. It's got to be over 1,000 to get anybody really excited. And we're having, well, what is it now? 982 points down on the Dow as we speak. So we could have another notable day in the stock market.
1,000-point day. Yeah, well, right now, according to what Market Watch is saying, the 10-year rate's down to 0.912%, less than 1%. And that means an environment where inflation is completely doesn't exist. And I just wonder if this is the big one, or can they come up with something? I think a lot of it has to do, April is the month. April's the month we find out that this thing goes dormant, in which case everyone will be vaccinated by the time flu season hits next year, because it's a form of flu, SARS, MERS, whatever. It appears to be close to SARS, which was a coronavirus. If that's the case, if it goes dormant in April, I'm not saying everything's going to be okay, but the damage will be controllable, perhaps, or maybe not, because the supply chain might be so terminally damaged. It could be a terminal event for the supply chain, in which case it's going to be years getting over this, and who knows what's going to fall in the process.
Well, yeah, I think the damage is much more psychological than physical. In other words, people are going to look around and think, oh, geez, okay, we dodged that bullet, but we are clearly so fragile. We clearly have these systems set up based on the idea of perfection in the world. And if anything goes wrong, these things just crash and burn. So we have to change the way we've been doing things, which means globalization is reversed big time. Free trade becomes an idea that nobody thinks is a good idea in its purest form, and massive amounts of debt, which require a benign world in which to be manageable, right? That is going to be called into question. U.S. corporate debt is one of the big victims of this if it goes on for very long, because there are all these companies out there that need their inventory in order to sell, and they need customers willing to buy in order to stay in business. So you could have this wave of corporate bond defaults, because remember, corporations have taken on record amounts of debt in this best of all possible financial worlds. And the lowest rated debt that's not junk is the fastest growing section of corporate debt. So we're taking on a lot of high risk debt. And the companies doing the borrowing are by and large involved in the global free trade system. In other words, their supply chains stretch all around the world. And so they're at huge risk right now. And if they start defaulting, then the banks that lent them money or the bond funds that bought their bonds or whatever, their creditors start going bankrupt. And you get this potential for a cascade failure like we had in 2008, 2009, where some little obscure section of the mortgage market blew up and it almost took down the entire global financial system. Well, this is much bigger. U.S. corporate debt is way bigger than the subprime mortgage sector was back in 2006. On top of that, you've got all kinds of other debt out there where derivatives books of the big banks didn't shrink after they almost destroyed the financial system. They did not shrink. The big banks didn't learn their lesson. In fact, they kept trading derivatives, and now people are talking about $1 quadrillion of notional value of derivatives out there. Well, those things depend on stability in interest rates, currency fluctuations, and credit defaults, right?
Yeah.
So let any part of the global financial system completely flake out. And several parts are flaking out right now. And then the derivatives books of the big banks are on the verge of blowing up. And remember, it's not just our banks in the US, it's Deutsche Bank out there. See, that's the big victim of almost any catalyst that causes a global financial crisis. Everybody then looks at Deutsche Bank and thinks, all right, does that pull down the entire European economy? Or what does it do to the value of the euro if the ECB has to bail out a derivatives book that is bigger than the entire European economy? The stuff that could happen is just insanely scary. And some of it is starting to happen now. So this is a very, very interesting time. And we're not even talking about geopolitics yet, are we? But meanwhile, in the Middle East, Turkey is fighting with Russia and demanding that Nato come in on Turkey's side. To his credit, Trump hasn't even mentioned this, as far as I know. He's just totally staying out of that whole thing. But we have treaty agreements among NATO members that require the rest of NATO to come in if any single NATO member is attacked. If they're attacked,
they haven't technically. It seems like they're doing the attacking here.
Well, probably what happens with Turkey is that they'll go ahead and insert themselves in that battle. They'll get their butts kicked, and then they'll say, "Hey, Russia's attacking us," and then we have to decide whether that qualifies under the NATO treaty for us to go in and fight with Russia. And hopefully that never comes to never becomes anything, because that's just too scary to even think about. But it's out there and it's kind of happening in addition to all this other stuff.
Trump has probably told them already, you can include us out. As my grandmother used to say, you can include me out.
I got to say, I like that about Trump. He really isn't impressed with, he doesn't get excited about battles in the world. He's not chomping at the bit to go invade somebody and to kill a bunch of people or anything. So if we had Hillary Clinton, I think it could be very different right now. Her reaction to something like that would be, here's an opportunity to expand our empire. Let's go do this. And that would be just really bad timing, in addition to just stupid policy. But so Trump is, and now if he's going to run against Joe Biden this time around, my God, politics got as crazy as economics is getting. So,
Yep. It's totally insane there. Hey, what happened with the Democrats? But I want to go back to one thing, the repo crisis. The final analysis came that basically it was in zero hedge, and it seemed plausible that JP Morgan had withdrawn like $100 billion that they were using to finance the repo market to get above market returns. And that was back when all the wonderfulness started there, I guess back in spring. And now we see why JP Morgan Chase withdrew from the repo market and left it to the feds, right?
I totally forgot to mention the repo market in all this, because the Fed comes in and does an emergency 50 basis point rate cut. right? Which lowers short-term interest rates, which in a normal world would make it easier for banks to lend money to each other. But instead, the repo market froze up on top of everything else, and the Fed's repo funds were overprescribed, oversubscribed by a record amount. In other words, the banks were desperate for cash, even with interest rates plunging. So, wherever you look, there's some dysfunctional thing happening that has the potential to be the first domino that knocks everything else over.
Yeah, and I want to point out one other thing that if you remember 0809, gold went down like almost 30-40% because of redemptions for hedge funds, and they were dumping their gold and their gold-backed securities. If that's not an oxymoron, I don't know what is. This was expected this time, drove gold down, $60+ in one day, but like close to 100 in the week for the week. That's what everyone is expecting. And that isn't what happened. So history rhymes, but it doesn't repeat, because here the market altered its behavior for exactly this type of occurrence. But we didn't know it until it happened, John.
FSN Radio. It's all about what's next.
Lumina Gold, ticker symbol LUM on the Toronto Venture and LMGDF on the OTC, is yet another of legendary mining investor Ross Beaty's Lumina Group. It's advancing the largest primary gold deposit in Ecuador. The resource is estimated to contain 16.7 million ounces of gold and 2.2 billion pounds of copper. At just $7 US per ounce gold equivalent, it trades at an incredible 13% of its net present value. More good news is on the way with an updated PEA study expected in Q2 of 2020. It has unparalleled infrastructure. There's grid power to camp with plentiful, inexpensive hydropower available. It's close to 2 ports and is just 8 kilometers from a paved highway. Water is plentiful. It's at low elevation, and the closest community, which is very supportive of Lumina's effort, is just a 7-kilometer ride. With all this going for it, it's likely to follow the typical Ross Beaty formula, which means big returns to shareholders. Find out more and sign up for notifications at luminagold.com. That's Lumina, Lumina gold.com.
The Financial Survival Network. It's all about what's next.
Well, that was a scare, because 2008 was a traumatic formative experience for gold bugs. And especially for the investors in mining stocks, because the regular stock market went down, which means gold ought to go up because they're not correlated assets, and frequently they're inversely correlated. But instead, gold and silver tanked, and gold mining stocks went down by like 90% in the space of just a few months, and that was just terrifying, because gold was the thing that was supposed to protect us from a gigantic financial crisis, and instead it fell just as much as everything else. And part of that was margin calls. Right? If your growth stock portfolio tanks and you've been using margin, and your broker comes back and says you got to sell some stuff, the thing that is up is what you want to sell, where you can get the most cash, and that was mining stocks and bullion to begin with. And so that selling pressure just crushed precious metals, and it looked like it was happening again here. We had that brutal week where mining stocks tanked and gold and silver went way down, but like you said, it reversed more quickly than it did back in 2008. That was a V bottom, but it was a really deep bottom. And this was a shallow bottom where it bounced off. And now gold and silver, what's gold up? $30 today?
31.60 right now. It was up to 33 for a moment. And one thing is, John, all of the companies out there on the floor, and let's just assume that everyone's PEA, preliminary economic assessment, is on the level, done according to standards, and represents the true facts of what lies beneath.
Gary, we shouldn't assume that.
No, let's just assume that it is, but obviously we know that's not the case. But most of those PEAs are calculated a year or two ago at $1,250, $1,300 gold. We've now got $1,668 gold, which means $300, roughly almost $400 for some of them, higher revenue per ounce, which turns the IRRs, internal rate of return, which is something that MBAs look at, which the rest of the world is kind of comes up blank on. But the IRR, internal rate of return, they were looking 30%. They're now like 90, 100% IRRs, John. And if you find a few of the good ones out there, and we know who they are, you just have to look at our sponsor page. The potential, because the stocks have not reacted yet, but they're probably going to, the potential is going to be enormous, ginormous, John.
Yeah, it's an interesting exercise to contrast gold mining stocks with, pharmaceuticals or big tech or something like that, where, in the big tech and most other aspects of multinational corporate world, supply chains are really long. They're easily disrupted. Margins are already, as high as they're going to get. They're not going to make a lot more money per dollar of sales at Amazon or someplace like that now, because they're already firing on all cylinders. And now you look over at gold mining stocks, and there's no supply chain to disrupt. They're just digging stuff out of the ground. And the value of what they're digging out of the ground is up by 30% in the last year. Okay.
Yeah,
so if you were, you're eking out a profit at one price, and then the price of what you're selling goes up by 30%, that is all gravy to your bottom line. And in percentage terms, it explodes your earnings. So where most companies in the year ahead, are going to be reporting really bad comparisons with the last few years, gold mining and silver mining stocks are going to be reporting these big, 50% gain in year over year in earnings, or 200% gain, depending on how leveraged they are. But they're going to be reporting spectacular increases in trend earnings. In other words, all of a sudden, where they were kind of flat for a couple of years, they weren't really growing their earnings. Now their earnings are spectacular and they're just heading straight up. That's the kind of thing that gets non-gold bug investors excited. There are a lot of momentum investors out there that don't really care what a company does, but they want it to be trending in the right direction, because they figure, well, if earnings momentum is high or price momentum is high or whatever, that trend is going to continue for a while, and you can make money by riding along on that trend. Now, gold and silver miners are going to be among the very few companies on the planet that are reporting numbers that get momentum players excited. Exactly. So this is potentially a really interesting year ahead for mining stocks.
And let me just mention one other thing, and that is that energy costs, we're looking at $46 a barrel oil. The largest cost besides labor in any mining endeavor is energy. Now, granted, if you're on the grid, then it's electric, and it's not really that susceptible to the price of oil, although nat gas has driven it down, and that these are huge bulk clients of electricity, so they might get a better deal from that. But when you're out in the wilderness, where so many of these large projects are, John, the big ones, the tier one projects, they rely on diesel generation. They generate electricity with diesel energy, and therefore it might cost them $100 a barrel to bring a barrel of diesel out there. But if the price goes down, it could cut their costs dramatically to get the energy there that they need. So that's yet another reason why why mining is going to profit handsomely from what we're seeing now.
Yeah. And add into this mix the fact that, say, if you're a Canadian miner and you're paying your people in Canadian dollars,
even better.
Yeah. In a crisis, the U.S. dollar goes up relative to the Canadian dollar, and so your cost structure gets even better because of that. And it's a really nice environment. I mean, assuming we don't have a zombie apocalypse or something.
If we do, then
or
it's
a
not
Middle Eastern war, but.
It won't matter at that point anyway. So
exactly.
We don't need to worry about that stuff. Nothing you can do about it anyway. But what you're saying is 100% true. The dollar index has gone way down in the past couple of days, though. But the loonie has followed it, and so has the Australian dollar. The Canadian dollar is 74.5 cents. The Aussie dollar is 66 cents. These are they're getting killed, but those are huge mining jurisdictions. And you look at every other, I don't know what currency is going up. The euro has gone up to 112. It's probably going to pull back. Hey, one other thing we need to talk about, then I know you need to go. Helicopter money in Hong Kong. Did you hear about that? Every Hong Kong citizen got 10,000 Hong Kong dollars.
Yeah, I did. See, that's what happens when everybody is disgusted with their government and they're out there rioting in the streets and it looks like the government might not survive. They start doing crazy things. Well, to the credit of the Hong Kong government, they're not shooting people. They're giving people money. Those are probably equally crazy ideas from a financial standpoint, but at least they're trying the carrot rather than the stick so far. But of course, that's the kind of thing that blows up on the currency, because by the time you've given people enough money to really make a difference in the political situation, you've
too late.
Doubled the currency supply. Your money supply has exploded. The value of your currency is plunging, and you've got then the disruption that flows from that. When you barely solve the first set of things that were going wrong, and that's where Hong Kong is headed. That's where, the stuff that we're talking about now with the coronavirus and supply chains and stuff like that, and all the disruption that they're causing, that is before people start publicly questioning the validity of fiat currencies, because that's the next stage of this. When governments spend so much money to try to stave off the financial crisis that inevitably flows from the setup that we have now, and the value of the currencies start going down, then everybody starts questioning the whole idea of fiat currencies. And see, that's kind of the end game when people are able to say, why don't we go back to a gold standard? Look at how badly managed this is. These guys at the Fed are morons. Why is the currency in their hands? When that becomes the dominant talking point for one or more political parties in the U.S., then we end up with the great monetary reset, which is sort of the end game of this whole thing, if we're lucky. There are other really much worse end games, but the currency reset is the benign possibility that's out there among all the horrendous possibilities. But that's coming too. We need a bigger crisis right now. We need lots of governments acting like Hong Kong's government. And they're on the verge of it. The U.S. and Europe and Japan are all ready to start buying equities and probably just handing money out to people. The whole debt jubilee thing is always on the back burner in this kind of a world, and it'll move to the front burner if there's a big financial crisis. So, as crazy as things seem now, this is the placid, eye of the storm period. It's going to be much worse going forward.
Well, we were in the eye for 10 years, John, almost 10 years, 9 years. And I think the storm has crossed, and now you better get into your storm shelter, your safe room, whatever it is. I don't know what's going to happen. I'm the first to admit it, but concern should be the byword, preparation, all these things. If the coronavirus doesn't get you, the financial pandemic probably will. Anyway, that's it for this week, and we will catch up with you next week. John, feel well, feel better. And any questions, comments, well, just email us, kl@kerrylutz.com. Check out John's site, which is, of course, dollarcollapse.com. Sign up for a free newsletter. Sign up for our free newsletter at financialsurvivalnetwork.com. John, we will catch up with you next week, and be well.
Thanks, Kerry. You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.